contrasting the narrative with the reality, right? The narrative has been recently, anyway, in the last 6 months, that we're in an inflationary regime. And you, as you speak with advisors and allocators, they're like, "Oh, I'm fine. I don't need kind of CTA. I don't need active. I've hedged really well with, energy ETFs or, a long only commodity index, whatever that commodity index ends up being overweight. And I'm doing just fine, right?" And so in the beginning of the year, that inflation narrative floated all the commodity boats pretty much. But what we've been seeing in the last few months is divergence, right? Dispersion between that space. A couple of months ago, we started going short copper, short platinum, short palladium, when energies were still the dominant commodity. And recently, pretty much everything has, at least for our systems, has started to roll short, with the exception of energies, right? And so, what is inflation right now? Like when you explain commodities are going to help me in inflation, well, what does that mean? Because energy is still up. Everything else rolling over, right? Copper, the PhD in economics, has been telling us that there's possibly some sort of signaling in the last 4 to 6 months. And so it's just this, what I tweeted today was the view that in the beginning, a lot of people realized that they needed to start thinking about inflation risks. In the last few months, maybe weeks, a lot of advisors have started to sell their sovereign bonds because they've been decimated, and allocated towards commodities to benefit from that hedge that they've seen in the last few months, right before that whole thing seems to have been correcting and sovereign bonds have gone up, right? Like, this is always the lagging indicators, always a step behind the narrative, right? So what is?
And in the background, of course, you've got 99% of people who are just only looking at equities, and right. There's still this incredible faith and confidence in the buy the dip crowd. It's remarkable. I mean, obviously there's some structural flows, and speaking of structural flows, I've been seeing some numbers thrown around that there's a little over $100 billion in rebalancing flows coming out of bonds and into equities this toward the end of this month or the next week or so. So we can certainly credit those flows for some of the moves that we're seeing in equities and bonds here. But it's just amazing how in the short term we can build narratives, like strategic narratives, around what we're observing in market behaviors and tie it to something fundamental or economic, but in reality it is completely dominated by just flows, by like structural flows, by target date funds or balance funds, et cetera, that just are forced to rebalance on certain schedules. And obviously, end of the month, end of the quarter, there's a confluence of these overlapping schedules. So you're going to get even larger moves, right?
What are you trying to say? Are you saying, do you have something against my copper having a PhD in economics?
No, I like that. Copper's not on the rebalancing docket, right? Copper. But but I was going somewhere with that though, because I think there's a hope still among equity investors that the Fed can sort of navigate slowing the economy enough to cap energy prices, to manage food and energy inflation and sort of core inflation without killing growth. And so you're going to have, the equity investors still seem to believe that there could be a bid or some sort of, we can resume the upward trend in growth stocks or in, cap weighted equity indices. I think the reality is, if the Fed is going to take their foot off the gas here, then equities might do okay for a while, but inflation estimates are going to start rising again. And then, investors are going to start looking out further and be like, okay, so now we're going to let inflation run hot for a while, which is just going to mean that we're going to have to raise rates more down the road, right? So this is very reflexive system going on. And if they actually manage to slow growth enough to moderate energy and food prices, then the economic damage that is required for that, given supply constraints in those sectors, is so large that there's no way that equities skate by without a material depreciation, right? So like if you're going to be bullish equities, you should be seriously bullish energy. If you're going to be bearish energy, you need to be even more bearish equities. Like there's no pulling those apart.
This is sort of the exact opposite cycle from the cycle we've had over the last decade, which is one of bad news is good news and good news is good news.
Right. That was the last decade. Exactly.
That's the last decade. We are
Yes.
in the bizarro world of that. There is no escaping it as well. And we're transitioning through whatever you want to call it, the transition in beliefs, right? The Overton window of the way people are viewing things. And we're at the beginning of that cycle. We're not in the middle. We're still living in the hope of the last cycle, using the tools and the beliefs and the habits of the previous cycle. And this is what's wonderful about systematic approaches, is that's not how that works. You observe and you adjust and you refuse the narrative. But it is incredibly important, I think, when you have a regime change of this nature, that you just observe what's going on and believe what you're seeing. All news is now bad news. If we get increase in demand and we have the opportunity for growth to come back, that is what tightens, is choked by the lack of supply of the underlying commodities that we require. And thus, that's not what they're going to allow happen. And so now, if we get global growth, you are going to get more action that's negative from the Fed. You're going to get more rate increases.
Exactly. Yep.
And so we're now caught in this feedback loop that is precisely the opposite of the last decade. And it's tough to swallow, I guess. People have to recondition their clients and investors.
As part of that, though, do you think they
Over to you guys.